We are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom. And that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S-curves. And there are going to be convergences between and among these technologies. So you're going to have one S-curve feeding another, and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge and cause explosive reactions. So it's pretty exciting.
Crypto is entering a new era as blockchain collides with artificial intelligence to spark growth the world has never seen. That's the latest message from ARK Invest CEO Cathie Wood. Cathie's confidence in crypto is at an all-time high. According to her, the entire crypto market, which is now valued at nearly $3.8 trillion, could climb more than 6-fold, surging past $25 trillion within the next 5 to 7 years. Her forecast may turn out correct as blockchain adoption grows, institutions deepen their commitments to Bitcoin and Ethereum, and crypto becomes woven into the global economy. The old system is cracking, the new one is rising, and the gap between them is closing fast. Make sure to stick around until the end of the video, as Cathie Wood explains how blockchain and AI together could unleash crypto's biggest rally yet.
The productivity uplift is going to be unlike anything we've ever seen. We've had multiple platforms evolving at the same time only once before, and that was in the early 1900s: telephone, automobile, and electricity. And that world. That was the technologically enabled innovation of the time and transformed our world completely. Let me put some numbers on where we are now. When we did this chart, we evaluated the market cap around the world associated with truly transformative innovation. That year, it was $7 trillion. So it was less than 10% of the global equity market cap. That's public equity. The next year, last year, that doubled to 14 trillion. And we did have a very good year last year. We believe that in the next 5 to 10 years, that number is going to north of $100 trillion. But what we're not saying when so that's the upside. The downside will be in the broad-based benchmarks, which have been beneficiaries of the traditional world order and are now going to be disrupted and disintermediated. I think the pace of innovation and the convergence between and among these platforms. Most investors have never seen exponential growth. Well, they recall seeing it once. It was during the tech and telecom bubble, and that ended badly. And that's why there's been this allergic reaction to innovation and high valuations. Most investors have a 1-year time horizon, maybe 18 months. We have a 5-year investment time horizon. My aha moment was after Chris had really written the paper, Could Bitcoin Serve the Role of Money? We're just working from a very basic level. And we were talking about a $6 billion market cap at the time, or network value, as we were calling it. And we had Art Laffer take a look at this paper. And he looked at it and helped us. We wanted it to be absolutely correct from an economic point of view. He looked at it and he looked up and he said, wow. He said, this is what I've been looking for all my life. This is a rules-based monetary policy, a global rules-based monetary policy. And I ended up saying, oh, okay, well, if that's true, how big could this become? And he said, well, how big is the US monetary base? And at that time, it was $4.5 trillion. Now it's $8 trillion, because he was dimensioning it as though it would be the reserve currency, a reserve currency out there. So a global rules-based monetary system, hugely important for humanity, I believe. And I share Art's view. I was educated by him, so that's not surprising. But and then I think the idea, again, Chris wrote the book. We're dealing here with a new asset class, also for investors, unlike anything we've seen before, and unlocking huge productivity and creating inclusion like we've never seen before globally. So I think, and decentralized finance is just mushrooming as we see. So, it's going viral. We've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures. Which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there, and we see that in the fixed income markets. The ridiculous rallies that have taken place, taking junk bond yields down to just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see. One of the things that has struck me from the beginning, and when Chris started at ARC, which was very close to the beginning of the firm, I remember saying very early on, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs, have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected.
So you guys are bullish then on Bitcoin, bullish ETH.
Yes, indeed.
Bitcoin remains strong because more people have begun to treat it like digital property that cannot be changed or inflated, while also recognizing it as a type of collateral that does not depend on banks or governments. This has given it a status as one of the foundations of a financial system that is being built outside of the old one. Meanwhile, Ethereum is moving forward in a different way. It provides the base for new kinds of finance, digital assets that can represent real-world value, and tools that allow artificial intelligence to interact with open networks. These are developments that are already taking place as institutions and developers continue to build on the technology. For many investors, Bitcoin and Ethereum are both long-term holdings that could influence the economy for years to come, with massive growth that TradFi still underestimates.
But my experience in innovation is when you're onto something early, there are bound to be problems. And when it blows up is when you invest. That's when you really think about the investing. And I'll say, just in terms of Ether and the NFTs and the creator community, I was listening to one of Placeholder's calls, and they featured the CEO of Async Art. And I had never heard async art. I had never heard about this phenomenon at all. He starts speaking, and I'm on a walk, and I am smiling from ear to ear. I have not smiled that wide a smile since I first heard of the internet, just to give you a sense.
Wow. That's the impact that NFTs had on you. This idea of async art and what they're building on NFTs.
Yes. I was saying, oh my gosh, the layering, that sort of get the creators involved with this. This could go nuts.
And why? What did you see? What was comparable to the early internet, Cathie?
Just the awe of how new and differentiated, how a different way of thinking, a way to reward creators, which we've been looking for generations or forever, right? And this idea that you could have, a piece of art and then layer it and sell pieces of it off and have the underlying creator still get rewarded for, thinking up such an interesting idea. I just thought, wow, this is so collaborative. It is so collaborative. And that's where the world's going. That's how ARC is set up too, as being very collaborative and iterative in our thinking. And so that's what I felt when I heard the CEO of Async Art talk. Monetary policies around the world have pretty much become unhinged. And, talk about trust. I think there's more trust in this ecosystem, in the way you've defined it, risk minimized, than there might be in the traditional world. As if we're right, there's going to be a lot of creative destruction and counterparty risk. And these banks are going to be losing share to the crypto world. And I want to get back to that in a moment, because you seem so surprised. And I think it's so obvious, but now I realize what the disconnect is there. But yes, absolutely, I can. And if I could say something, I learned an important lesson it was the currency crisis, the Asian currency crisis in the 90s, 97, I think it was. And the Thai baht devalued, and nobody thought anything of it. Thailand was, hardly measurable out there, but it ricocheted. There was an Asian crisis that took place, domino effect. And so we began to ask companies like Boeing at the time, oh, what's your exposure to Asia? It seems as though something's unraveling there. And they'd say, nothing, not even 5%. Well, what they didn't say is it might have been 4% of their sales, but it was more than 100% of their growth. And so when Asia went down, Boeing's earnings imploded in a way that most people couldn't understand, because they said, wait a minute, they told us it was only 5%. Yes, but they didn't say what percent of the growth it was. And I think we're talking about something equivalent here. And so, oh yes, the banks are onto this. Maybe a fine point on this, $2 trillion. So nearly 10% of the U.S. economy, or 2% of the global economy already. Remember the Asia example I gave, where only 5%, 4% but growing enormously. So in many ways, crypto has arrived and is not going to go away. I completely agree with Chris. I think going through the big volatility bouts as we were just getting institutional interest, May, I think there was a little bit of a pullback, but, I think, and you could see this with Ether, especially, it didn't skip a beat. It worked brilliantly. Whereas most in the financial world are just saying this, just because they don't understand exactly how it's set up. They're just saying this is leverage upon leverage. This is upon leverage. This thing's going to come crumbling down. So the more times we go through volatility and the network comes out stronger for it, the more credibility it will have and the more confidence investors will have in it. And then the other thing, and we did the B word, you might have heard about, and a large part of that was, okay, how do we support this ecosystem so it does become stronger? And with Bitcoin, that would be supporting developers. It seems like there's no problem with developers because of the economic model on the Ethereum network. So supporting, but also I think you've got just listening to Chris and Yassine, and I don't know you so well, but it's clear you know in great depth what is right and what might be wrong. Just going out there, fine minds surfacing and exposing bad behavior, and coming down on it. Certainly from the the new governance platforms that are evolving.
So there's Cathie Wood, making it clearer than ever that she and ARK Invest have never been more confident in the future of crypto. In their latest outlook, ARK projects Bitcoin's bear case at around $500,000, their base case near $1.2 million, and their bull case as high as $2.3 to $2.4 million by 2030. As for Ethereum, ARK's forecast suggests that by 2032, its market cap could top $20 trillion, which would push the value of a single ETH to roughly $166,000. And because Ethereum's supply is now deflationary, the real upside could be even greater. Do you agree with ARK's projections, or do you have your own? Let me know in the comments. If you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.